Welcome to episode number 196 of CXOTalk. I'm Michael Krigsman. I am an industry analyst and host of CXOTalk. Each week, and actually sometimes more than once a week, sometimes twice, sometimes three times a week, CXOTalk brings to you conversations with the most interesting and innovative senior executives in the world. And we talk about leadership, we talk about technology, and the impact on the enterprise. And today I'm so thrilled to talk with Rüdiger Schmidt, who is the Chief Information Officer of Banco Sabadell, which is one of the largest banks in Spain. And it's a company that was founded in the late 1800s, around 1881, that time frame. And so you can imagine now, digital transformation, it has completely transformed its business. And so we're going to hear a very interesting story today. Rüdiger Schmidt, thank you so much for being with us.
Hi, very happy to be with you again.
And you're right now just outside Barcelona in your office.
That's true. I'm here in the office at this time quite alone. So I'm much closer to the weekend than you are in Europe.
So it's about 7 p.m. And we met first last spring when we did this kind of conversation live on stage in Madrid. And so it's great to see you again. And so, Rüdiger, please tell us about your role and tell us about Banco Sabadell.
Sure. So I joined Banco Sabadell July last year. So quite new here after working 18 years in several management positions in Deutsche Bank in IT. And I'm the global CIO. I'm responsible for all IT development, IT strategy, infrastructure for the group. Banco Sabadell started as a very tiny bank supporting local industry in the city of Sabadell. That's where the name comes from. And for a long period of time, it only had one branch in Sabadell. But then it started slowly to grow, always focused on business banking. And then in the late 90s, 2000 on, it started an incredible growth race. Bank Sabadell has integrated 12 banks in the meantime, and with that mergers, it became the fourth largest bank in Spain. If I look at the integrations, the first two took around 24 months. The last three integrations, technical integrations of a bank, that means starting a project to take over all IT and data, took 5 months. So Bank Sabadell was a real integration machine and profited from the crisis in Spain. So it was one of the few banks surviving and becoming stronger after the crisis. And that made us the fourth largest bank in Spain. The next step then coming from, so it was a local bank, then it was a regional bank, it became a national bank, and the next logical step was to become an international bank. And that happened with two steps. So on one side, we started a greenfield bank in Mexico, which went live successfully early this year. And we acquired TSB Bank from Lloyds in the UK, and are in the middle of the integration process. So in numbers, Sabadell in Spain has roughly 6.5 million customers. In the UK, more than 4 million customers. So around 11 million customers. In Spain, we have 2,300 branches, more than 600 in the UK, and overall more than 20,000 employees.
When I was in Madrid, I was struck by how many branches there are. Banco Sabadell has branches everywhere you look. Now, when you think about digital transformation, what does that actually mean in practical terms for an organization like Banco Sabadell?
Okay, first of all, it's not just a digital transformation. It's a transformation of the whole bank, and digital is one important piece. But in fact, we talk about transforming the bank and not just doing a digital transformation. And the branch network is a very important part of that transformation. First of all, let's have a look at why or what is happening, why we are transforming, what is happening out there. There is, of course, a digital revolution, and it is now when a client comes with his or her mobile device into the bank, it has probably more CPU in the hand than the computers which we have there on the desks. There is this cloud in nearly network bandwidth unlimited, which make it very easy for newcomers to get into that business. So digital is a big trend, but there are others. There is the low interest situation of the bank, so margins are shrinking for banks. We do not make money with certain traditional businesses, so it's a paradox that we don't like that clients bring us deposits because we don't need any funding, because central banks give it for free, and if we want to put deposits there, we even have to pay for it. And it looks like that this will take longer, so the whole business model is shaking. And then, of course, the whole regulatory requirements haven't stopped. So we still are facing new regulations, MiFID II, IFRS 9, PSD2, and you name it. So these are the three big factors which make us think how to transform the bank. And if in the past a bank was made money with its balance sheet, at the end nowadays we have to think about new ways to make money. And our CEO best described it just this week on a conference. He said we have to transform our clients from balance sheet consumers to platform users. And that is what it's all about. The bank has to become a platform, and while we keep our business and being the servicer for a lot of transactional business and for the money, we have to become a platform for much more in order to be able to grow and be profitable in the future.
That's really interesting. So that term platform in the technology world is kind of loaded because it means the place where you come to have all of your technology needs met. And so when you talk about a platform of the bank being a platform, what do you mean by that?
Okay. Again, going a bit back in history, when somebody talks about bank and platform, you think first about a core banking platform. And a lot of banks are struggling with their core banking platforms because they missed the point to renovate them, which has two impacts. The first impact is that the regulatory requirements are very difficult to be met because you don't get the data out of the systems you need for the regulator. And the second thing is that the systems are not real time. They are not transactional enough. They are not service oriented in order to be the backbone for a digital bank. Bank Sabadell was lucky that in the early 2000s, before the banking crisis, they did a complete overhaul of the core banking system. So we are in the good position that we have a very stable, robust, 24/7 real-time core banking system, which is our banking platform behind that. Then we developed our digital platform, and we are continuing to develop it. It's called Proteo, and we are now at Proteo 4, where we build that layer on which we want to create our services to publish them to the outside world. Our ambition is to do it a bit like Amazon. Every service we build should be built in a way that we can use it also for third parties. We're not there yet, but working on that one. And it all moves into ecosystems in both directions. So we will open our interfaces that others can use our bank as a service. For example, we have an ERP provider here in Spain who is directly linking the ERP system with our core banking system. Of course, always when the client gives the authorization. But we also want to look in whether we, in our banking offering, in our secure environment, could sell things or give services which are not directly related to our banking offering.
So when you think about the bank and what the bank does, it's no longer just about people coming in and depositing money. You're providing all of these different services, and they all rest, and they're resting on top of this technology platform that you've built. Is that a correct way of saying it?
That is true, yes. And we are still evolving the platform. The thing is, if you started very early on giving that services, and we were always spearheading these technology things, at a certain point, your digital platform also becomes a legacy, and you have to evolve it. So we have a lot of digital services now, more than 10 years old, and we need to renovate them again.
So there's this very close tie between the technology that you're building and the most fundamental strategic goals of the bank from a business standpoint, it sounds like.
Yes, that is true. That is maybe also the good thing of coming from the history of the bank, that it was quite a small bank, very aligned, always aligned on very strategic goals, whether it was the 12 integrations of other banks, which was always a huge project where the whole bank was involved, or weathering the storm of the big banking crisis. It aligned a lot the company. So Bank Sabadell never had the time to create silos, neither technology nor on the business side. And that is something we have to preserve, and it helps us now a lot in the digital transformation, that we work hand in hand with all businesses.
When you say you never had the time to create silos are one of the real challenges that companies have, especially a company that's over 125 years old, 130 years old. When you say you didn't have the time to create silos, can you elaborate on that and maybe explain how you're different, or why, let me say that, why you're different in this respect, given relative to probably most of your competitors that are very heavily silo oriented?
Yeah, I think first of all, it's a tone from the top, so that the senior management of the bank just does not allow any silo building, and there's a clear focus on the strategic goals of the bank. The bank always operates on a 3-year strategic plan, which aligns all businesses and infrastructure functions. Secondly, certain functions in the bank were never aligned to business, but kept central. Give you one example in this, the whole data structure. So all our data, the creation, the processing and output of data warehouses are central, and we are always talk about bank data. We never allowed that different areas like finance, risk, marketing have their own data models, data warehouses, and then at the end you have trouble to bring them together, where we see a lot of banks failing now, responding to regulatory requirements because they just don't get the data together, or they do not match. And so there was always a very clear strategy that data is an asset of the corporation and never of a single area, which gives us now a strategic benefit, and the rest is level of collaboration among the areas in the bank.
So it's so you have a strategic mandate from the top to do this, and then you have set up systems so that you have a view of the data that crosses the silos, and then you have a culture that respects the need to be cross silo, and that emphasizes that need to be cross silo. Are those the pieces? Do I have that correct?
Perfect summary of what I said, yeah.
So now you've got these technology systems, that the platform, as you term it, that enables you to offer services to customers. Can you give us an example of the kind of services that you provide to customers that rely on this platform, and why the platform makes it possible to deliver these services in a better way than your competitors?
Okay, so just recently, this Monday, we launched our new wallet application, where we have the classic wallet function of the bank with credit cards, and we added to that the new instant payment platform, which is an industry platform in Spain for instant payment, person to person. We integrated that immediately into our wallet platform and into our digital capabilities like electronic signature, fingerprint lock on. So we were able to launch on time with added functionality, and we have seen after a few days that the percentage of adoption to that new service of instant payments via mobile overall in the Spanish banks is higher than our market share in retail banking. That means we have higher adoption among our clients to that new service than any other bank in Spain, and that was possible by combining this new functionality with existing services and our architecture to build that new app.
So this technology architecture is truly a strategic advantage. It's more than a strategic advantage. It sounds like the technology platform is the thing that enables you to be responsive, to be agile, to offer new products and services electronically very quickly to your customers.
That is true. So we have a platform which is very well architectured from a service point of view, but also from business services behind, about electronic documents which you can sign electronically and present electronically. A real multi-channel architecture, although I don't like that much the word multi-channel, as you know, which helps us to be very quick in deploying any service to any channel, and even deploying services to third parties with our open API.
We have several questions coming in from Twitter, and let me respond to, let me ask Arsalan Khan's question first, and let me just say, Shelley Lucas is asking about blockchain, and Shelley, we're going to be talking about blockchain next, but I want to stick with Arsalan's question, who says, what happens when 3-year strategic plans and business models become obsolete due to technology and workforce advancements?
It's very easy. You have to adapt. So a 3-year plan gives you a strategic guidance on where the bank wants to be. But whenever there is a change in the environment, you have to be very quickly and change and adapt to that plan. See, a strategic plan like the last one was the goal to go international. I'll give you an example, which meant and the goal behind was that a certain percentage of our business volume will come from revenues outside Spain, to be more independent from economic cycles in just one country. And that is the goal of the strategic plan. So now you have to apply that. And for example, TSB, the acquisition of UK was not even known. The possibility was not even known when this 3-year plan was started. But it was an opportunity during that period which we took, and that is true for any change, and also technology change. We will just adapt. We are not a slave to our plan. It gives us guidance to where the bank strategically wants to go.
But before we again jump into fintech and blockchain and open APIs, and there's a whole bunch of things that we have to talk about, you say you're not a slave to the plan, and I keep coming back to this. You're a 130-year-old organization, and how does a 130-year-old organization create a culture where you can adapt and embrace change the way you have? There are much younger organizations that have endless struggle with this. How do you do it?
Well, I think it's the permanent challenge. Never be complacent with the status quo. And that is true for all areas. So we are leading in cost-income ratio within the Spanish banking sector, with roughly 50% cost-income ratio. That doesn't make us complacent, and we say, yeah, we're anyhow the best. We have very strict plans to reduce our costs, to do cost reduction programs, as one example. So never be complacent with what you have. You always have to try to become better. We have clear plans to be leading in client satisfaction, in net promoter score, in all sectors we're working, and we're measuring against that. So you always have to set the goal higher and keep on moving. Never be complacent. That's what we do.
So you mentioned your goal is to have very high net promoter score. And so let's now talk about the relationships to the outside world. And I know that you have invested very heavily in things like APIs, social media, mobile, big data. So tell us about that.
Okay. Open API is an interesting thing. We were the first bank in Spain which organized a hackathon. It was very successful. A lot of ideas came out of that, but we needed something, and it was in the first time experimental in that hackathon against the programmers could develop their ideas. And so we had first a mock-up for the Open API, and then we saw, well, there are very interesting things coming out, and maybe we should have an open API. And so we developed standard open API for classic account balance, transaction inquiry, money transfer. And what we've seen is that on one side we have currently more than 20 startups, but also SMEs who are in the process of adapting to that API and using that API. In the beginning, I told you about this ERP system in the cloud, which is connecting to that. But on the other side, what we have seen, the Open API is not only interesting for the outside world. In our innovation labs, for example, we started experimenting with a tangible bank hardware device for clients in the client's home. That means for our own product, we saw, well, the easiest way to build that and to integrate is using the Open API. So suddenly the Open API becomes an enabler for internal project because it's much easier, much standardized to use that. And that is very interesting. And now this Open API will enable us very quickly if, for example, one day things like Amazon Echo are translated to Spanish and will be available in Spain. It would, for us, be very easy to integrate a thing like Amazon Echo or similar devices to our core systems. In Europe, we have a new regulation, the Payment Service Directive 2, coming up. Early 2018 will be the date, where banks will be obliged to open APIs for third parties. And that is the thing where first of all, we already have it. We have to adapt to these standard interfaces, but we know how to do it. We have to adapt it. But even the more important thing is, for us, it's much more than a regulation. It's an opportunity not only to open our API to other banks, to fintechs, to integrators, but we can start thinking about using our services against the backends of other banks and give services to clients even when they have the account in other banks, for example, with the advantage of being already able to work with such open APIs. Social media, we started very early to have a 24/7 active social media team, always scanning what's happening around the world. So if there might be a system outage and there's noise on social media, they will contact immediately people. There were discussions about some local opinion makers were talking, criticizing banks' strategy and statement, where then our chief economist contacted them over social media and said, let me explain what is behind and how that works. And after that, this very popular guy tweeted, well, politically, I still have a different opinion, but thanks, Banco Sabadell, you explained me a lot of things which I didn't know before. Another very nice anecdote on the social media is that our team picked up once a message from a taxi driver in Madrid who was tweeting and complaining about the service of his bank, which was not Banco Sabadell, because he was waiting for his POS device, for the card terminal, for more than 3 months. our social media team located this guy, checked the next branch, and checked whether they would be able to give him a POS device and open an account with him quickly. So they did it. We found that branch, and they answered, "Look, go to that branch, open an account with us, and you will get a POS device immediately," which was good. We had a new client, but then, as this guy was very active on social media, he tweeted around the world how great this experience was, and he never expected that could help. Today, we have more than 40% of market share of POS devices in taxis in Spain. If somebody says you cannot make money with social media, we have proven that there are ways to do it, but you have to do it very good.
And I want, I'm sorry, I just interrupted you. I'm sorry.
Yeah, on the big data piece, of course, we're doing what everybody is doing, using advanced analytics, predictive analytics, pattern analytics, combining our standard transactional data with data from the outside, behavioral data from the internet. But last year we said we have to do more. We have to build products and services around our data, and together with our innovation team, we developed an idea. The system is called Kelvin. The name comes from Lord Kelvin, who said one time, "What you cannot improve what you cannot measure." And we use data from our more than 250,000 POS devices we have with clients in Spain, and analyze that data and give services to our clients, to stores. So a client of Banco Sabadell with his POS device gets a web page where he can check what is the medium-sized ticket of people who are buying in my shop. What is a medium-sized ticket of all my competitors around? Of course, anonymized, but always very focused on the business he's running. How sticky are my clients? Do they shop around, or they only buy with me? So we can tell your 80% of your clients are only buying shoes with you, and only 20 are shopping around. If it's the other way around, maybe he should do a loyalty program with a client. So we measure client loyalty because we can tell him if his clients are buying elsewhere. We can tell at what time which type of client is buying. We're telling, always anonymized but statistic data, what is the average salary of the clients who are buying in his shop, and compared with the average salary or average age of clients shopping at his competitors. So extremely useful information. Nobody else can give that data, fully respecting data privacy and security, but extremely valuable for the retail stores. And we have several examples where we won retail stores, even chains, who said, well, we take Banco Sabadell because nobody else can give us that service.
So I want to just point out to the people that are watching that Banco Sabadell, when you use social media, it's not just to give pat standard answers, but it's actually to interact with your customers and give them genuine support. And you mentioned that your chief economist has responded to over Twitter to explain what the bank is doing. So I just want to point that out to the people listening. I think this is a very important point.
Yes, you're right.
Now, what about FinServ startups and blockchain? What is your view on that? What are you doing with startups? How do you see blockchain? What are your thoughts on that?
Okay, let's start with the fintech world. I see two types of fintechs. One type which says, well, I do a better retail bank than the other banks do. I have nicer front ends, and that is true. They can build new stuff, very fancy things around that, and give standard retail services. The problem here, and if I would have put a lot of money in that kind of fintechs, I would be worried that with that business you don't make any money today. I explained it in the beginning that having a lot of money of clients in your current accounts or in your deposit costs you money today. On top, you give them debit cards, ATM access, and so I'm thinking about what is the business model behind, and that's that effect. There are other fintechs, very interesting, which go much more vertical, which pick one product, one value chain. You look transfer-wise for money transfers across country, talks on FX products, which I believe are very interesting because they take one product vertically front to back and disrupt the existing model, and that it's always clear whether that works or not, but that is very interesting. And we work with fintechs. I'm not believer and supporter in investing a lot of millions like other banks did in this newco banks because of lack of sustainable business model. From my point of view, I rather look for fintechs who can be good providers of technology and help us improving our services to our clients. And we are happy to work with them. We are happy to be client of that fintechs in order to provide better services to our clients. On blockchain, well, of course, we are not the size of bank who is changing the rules of the game and putting blockchain as to substitute SWIFT with blockchain, things like that. But we see a lot of potential. There's still a lot of questions. The maturity of blockchain is quite low. I don't think that it currently could support very large amounts of so what we do in transactions. One thing which doesn't work in blockchain is real time. It is by definition not real time, so certain transaction will not work. Nevertheless, it has a huge potential to substitute all businesses or to disrupt all businesses where you have a trusted third party somehow in between, which can be all the custody business, which can be trade finance business, for example, together with smart contracts that can be very disrupting. So low maturity, but very high impact if that will work. We are experimenting with blockchain as well. We are, for example, looking whether we can use blockchain to build kind of escrow accounts for the collaborative economy, because there you always have two parties, P2P, who have to trust each other, and there has to go some money. Usually you do that with escrow accounts when you do that in large business. Maybe blockchain gives us the possibility to do that for very small amounts in that collaborative environment. So we are looking at that. We are collaborating with other banks, and definitely very high on our radar.
So with startups, fintech startups, you said that you prefer to partner with startups that can provide services or benefits to the bank, as opposed to invest, because you're very focused on them, the partner, the startup, having a sustainable business model.
That is true, yes.
And with blockchain, given the limitations that you described, why do you think is there so much excitement and noise around blockchain, given what you were just talking about?
Yeah, it's just what I said, the potential. If I maybe it's visionary, but saying that in the future there will be no custody business, and a share of a company will no longer be held in a custody account by a bank, and you don't have all that settlement and clearing around, but it's a share of a company is just a smart contract in the blockchain. And any corporate event like a dividend payment is an event in that smart contract, which again then automatically creates a payment from that smart contract via the blockchain to the shareholder. If you imagine that, if you imagine in trade finance, if you know how much paperwork is around there, and again all this trust thing, so are the goods which are ordered abroad, are they really coming or not? Imagine, and that goes to Internet of Things, that a container arrives here in the harbor of Barcelona, and the chip in the container tells a smart contract of the trade finance, I'm here in Barcelona, you can now pay the money, where today a lot of paperwork is around. The impact can be huge of really revolutioning certain business area, and there are a lot more in all the interbanking settlement, clearing, whatever. There is a huge potential. Again, we are not the ones in the size who will do that moves, but definitely we will follow very, very closely and look for blockchain for innovative products, like I explained before, to use that technology for our purposes and for our clients.
So so blockchain needs to be fit to the appropriate task or activity. We have very little time, but we have a question from Eric Jonker, who, I hope I pronounced your name correctly, who asks, from a technology point of view, he thinks blockchain is mature enough. So is your concern with the technology or with the application of that technology in banking products and services?
I think blockchain as an algorithm is mature, no doubt, but there are a lot of questions to be answered. Regulators nowadays, if there is a custodian or a clearing interface, they can easily inquire data and control. So regulators in financial services have a lot of concerns about their ability to control when things are happening in the blockchain. These are questions which have to be answered. There is another study, I don't know whether that is true or whatever, but you have to think about if international payment would run over, all international payment would run all over blockchain. Somebody did a calculation, there is not enough energy on Earth to run all the blockchain nodes which would be necessary to support that. I cannot prove that, but large scale, we still have to check. So it will come, but it will take some time, and we have to resolve certain problems though.
And we have just about 1 minute left. And so briefly, can you tell us about the future? What are your future plans? Where are you going?
Well, definitely, the bank has very big challenges ahead. We are still integrating a 5 million customer bank in UK and preparing the platform. That is a very big goal for next year. We are improving our digital capabilities here in Spain. In order to give more services, much more client-oriented, much more coming from the user, much less bank products you see in our apps, but rather use cases of users. So, like an example, I want to pay, and given the situation where I'm paying, maybe I need a credit card, I do an instant payment or whatsoever. So I put the situation first and then analyze what is the best product the client can use to pay, instead of always putting the bank product. Please select your credit card or whatever in the front. So that is one big transformation we still want to do. And then, of course, we have our international expansion plans. We launched successfully the business banking in Mexico. We are now analyzing whether we can use our capabilities to also start retail banking in Mexico.
Okay, well, this has been a fascinating discussion that's gone by very quickly. We have been talking with Rüdiger Schmidt, who is the Chief Information Officer for Banco Sabadell, which is the fourth largest bank in Spain. And what a fascinating conversation about the role of the platform and the coming together of the business and technology in retail banking and all of the exciting things that you're doing with technology. Rüdiger Schmidt, thank you so much for joining us and taking time to be on episode number 196 of CXOTalk today.
Thanks. It was a pleasure, Michael.
And I hope you tune in next time. Catch the schedule at cxotalk.com/episodes, and we will see you again very, very soon.